Hi, I'm Audra Wilson Russell, owner of WATS CPA firm, and today we're talking about how to properly deduct automobile expenses associated with your S corporation. First things first, let's talk about the ownership of the vehicle. Is it company owned or is it owned by the taxpayer? Let's take the company owned route. Alright, so if it's company owned, we first have to look at who's paying the expenses. Are the expenses paid by the corporation or are the expenses paid by the taxpayer shareholder? If the expenses are paid by the corporation, then all of the expenses associated with the automobile is deductible on Form 1120S. Remember, we're talking S corporations here. For whatever reason, the taxpayer pays the expenses on that company-owned vehicle. There are three factors to determine how the expenses will be treated. First factor, are the expenses reimbursed to the taxpayer under what's called an accountable plan? If so, then the S corporation gets to deduct the expenses associated with that vehicle, and the taxpayer is not taxed on the reimbursement of those expenses. If the S corporation reimburses the taxpayer without an accountable plan in place, then it's just considered a distribution from the company. And remember, with distributions, you're running the risk of having the IRS reclassify distributions as wages if there isn't a reasonable compensation taken for the business. Third bucket is if those actual expenses are not reimbursed by the S corporation, then what can that taxpayer do? In the old days, the taxpayer was able to claim it as an itemized deduction on their personal 1040, but that option is no longer available beginning with the 2018 tax year due to the Trump tax overhaul that was passed at the end of 2017. It used to be where you can take the deduction based off of mileage or actual expenses with a proration of a percentage of how much was business versus personal. But again, this option is no longer available. So now let's talk about if the vehicle is actually owned by the taxpayer. What are the options? If it's owned by the taxpayer, again, we have to see who's paying the expenses. If the expenses are paid by the taxpayer, vehicle owned by the taxpayer, then you're going to follow the same scenarios here, where if it's an accountable plan, the corporation gets the deduction. If it's not an accountable plan, it's just considered a distribution. And then if it's not reimbursed at all, you just pretty much lose out on any deduction. So now it's a personal vehicle, but the S corporation pays the return. What happens in that scenario? In that scenario, the S corporation would need to add the expenses for that automobile into that taxpayer wages onto their W-2. So if they do add it onto their W-2 as a wage expense, then the S corporation gets to deduct the expenses associated with paying the vehicle. If it's not added in the W-2 of the taxpayer, then again, it's considered a shareholder distribution. And again, you're running the risk of having the IRS reclassify those distributions as wages and having to pay back taxes. So if you need any assistance on deducting automobile expenses for your S corporations, please feel free to give us a shout. Again, I'm Audra Wilson Russell, owner of WATS CPA firm.